Find your primary hard skill. So I found that my primary hard skill was I know how to raise money better than anybody I've ever met. I've always built businesses with investor capital. I've learned over the years that part of the elevator pitch is to really present what it is you do, but more importantly, what you can do for that other person. And this is what has allowed me and literally allowed, many hundreds of people to raise millions and millions of dollars.
This is your real estate syndication show. I'm your host, Whitney Sewell. Our guest today has led the teams in raising over $2 billion from investors. He's a founder of 5 Star Capital, formerly CEO of a small oil company that he founded at age 23. He mentors all over the world, other people, and just how to raise capital. He's the host of the Capital Capitalist podcast, and his name is Brad Blazar. Brad, it lays out a lot about capital raising that if you are trying to raise money from investors, you're going to learn a lot from. He shared a number of just tips on attracting high net worth investors and the communication you need to have with them and how to speak to them from the very first conversation you have and what that needs to look like, even specific things not to talk about on the first conversation that I hear so many people doing this. I'm guilty of it years ago as well. But he's going to help you today to be good at raising money. And that's what he is really good at. And he's helping so many people to do that. I hope you will listen and learn and improve your capital raising ability today with Brad. Brad, welcome to the show. Honored to have you on. Looking forward to the conversation. Your superpower is what so many of our listeners are trying to become an expert in. So I'm eager to have you speak to them, right? And us just have this conversation about that. But welcome.
Thank you. It's great to be here, Whitney. It's a pleasure.
Yeah. Well, Brad, I know you. I want to get a little bit of your background, of course, but you started with an oil company at a very early age. Let's go back maybe just a little bit before that. What spurred you into entrepreneurship and having your own business even at such a young age? Was that something in your teen years? What was that?
I think like a lot of kids, I was kind of molded by my parents to some degree, get a job, find a career path, put money aside in a 401k and, hopefully one day you'll have a comfortable retirement, kind of the traditional upbringing in, most middle-class families. What was really interesting though about, my background is at a pretty young age, probably in my, late teens, early 20s, I was exposed obviously to the books, the Zig Ziglars, the Kiyosakis of the world. And I did have a rich uncle. My uncle Henry, was basically an orphan, never had more than a 6th grade education, but he went on to literally amass a fortune as one of the premier manufacturers of women's fashions and created a women's fashion brand that he and his partner, ultimately sold, had a very nice exit. And, I just remember, his lifestyle, seeing him with multiple homes, Rolls Royces, chauffeurs, and all that. And I said, I want that. And at a young age, in school, studying to be an architect, I responded to an ad in the newspaper one day for a job and was hired by a very small oil company. I was 21 at the time and, never drilled a well, didn't know the first thing about oil and gas, but, the CEO saw something in me and kind of brought me in under his wing. And he basically gave me a blueprint going out there and building trust, building relationships, commuting at the highest level with ultra high net worth individuals. And, I was on my way to raising millions of dollars. And so I, after a couple of years of doing this, just said, I'm a young kid, let me go out and take some of the money I've made, start my own company, surround myself with a team of professionals. If it doesn't work out, I'm young enough to always go back to school and finish up my undergraduate degrees. And so unbeknownst to my parents at the time, I just one day decided to launch a business and, put a shingle on the door, printed letterhead, filed the LLC, created the business entities. And, it was kind of a situation where my parents did not know I had gone in this direction until they received my grades at the end of the semester. And that was a conversation that I don't want to have again because they thought that, I was throwing my life down the drain. And, a year later, I come driving home in a brand new Porsche. And now I go from being the black sheep of the family to, oh, this is our son, the CEO of an oil company. And, over the course of 10 years, we built up a really nice business for ourselves. We had, I don't know, probably 30, 35 employees, on our payroll, raising millions of dollars, drilling for oil and natural gas in Texas, Oklahoma, and fields in Louisiana. And it's unfortunate, but in the late 80s, early 90s, there were a couple of major events that really impacted the industry. Number one was really just the Tax Reform Act of 1987. Took away all the drilling incentives, all the tax incentives, and so investor capital just slowly disappeared. And then the other much bigger one, of course, was OPEC had much greater control of energy prices, and they drove the prices down. So, I went back to school and, came out with a degree and, went out to corporate America looking for a job.
So those changes just stopped your business altogether.
Pretty much. Yeah, absolutely. I mean, I made a decision where I just said, I was married at the time, newlywed, and I just said, look, man, I'm not going to sit here and just keep putting savings back into the business and trying to keep the business afloat. We were debt free. And I just said, I have no idea how long this can continue. I could literally go broke. And so I consulted my advisors, my attorney, my CPA, and they said, look, man, you don't have to file bankruptcy because you don't have any debt on the books. Just slowly over 9 months or 6 months, collapse the business, pay your employees some severance and do it the right way. So we did that. We sold off some of the assets. But, here I was now, in my late 20s, early 30s, not knowing what that next chapter in life would be, got pretty high overhead. And so I was just living off of savings, man. I was fortunate. I had, plenty of money. I was living off of savings. And I said, I got to go back and complete my undergraduate degree. Like, people that just lack a college degree find it real challenging, I believe, to go out in the workforce. And so I went basically out there. I was just really disillusioned. I mean, here I was, the CEO of an oil company at a very young age, very successful, and people wanted to offer me salaries that would be comparable to what I would make in a, good month or two. And so I just said, nah, this ain't for me. And so what I realized and what I really understood about myself, and this is something I think, Whitney, that a lot of people just never get to, is you find your primary hard skill. So I found that my primary hard skill was I know how to raise money better than anybody I've ever met. Like I've raised millions of dollars. And that is a major problem that most businesses and entrepreneurs have. And I felt that money exchanges hands when problems are solved. And so I entered basically the career path of becoming a professional capital raiser. We call it a wholesaler, or basically a placement agent for some of the world's largest financial services companies, raising hundreds and hundreds of millions of dollars. And so, over the course of my career, working for companies in, financial services, whether it's broker-dealers, RIAs, family offices, ultra-high net worth, we've raised well over $2 billion through my efforts and the efforts of sales teams that I put together. That's a big, huge number. But when I look at this business that, you or I are in, and I look at, all the people on the Facebooks, the Instagrams, the LinkedIns that are either raising money now or are wanting to raise money, there's nobody else out there that can teach people some of the more advanced things that I can teach them because they've never done it before. And I can take somebody that's been successful raising capital and say, look, I can teach you a more advanced strategy where literally in the next 12 months, you can raise 5 to 10 times as much money as you're raising right now. And it's not that you're going to work any harder. It's just that you're going to understand a couple of key concepts that you're not pursuing today. That's largely, what separates Brad Blazar from most of the other people out there that kind of run in the same circle. It's that most of them have never raised money to the extent or at a level that we have.
Wow, what a track to getting where you're at now. But I wonder, when you're, this oil business collapsed, right? There's some changes, the tax reform, whatnot. How did that shape, how you say we're going to build the next business, or even, things you're thinking about now as you're growing your, the capital raising business and coaching and all, other businesses, man, how does that affect what you do now?
Well, I think it made me realize that I never want to go through that again for obvious reasons. It made me realize that in building a business, I believe it's much safer to build it with investor capital. Investors are not banks. Therefore, they lack the rights that lenders do. They can't foreclose. They're not going to like the fact maybe that you have to lower or temporarily disrupt distributions on an asset that might be underperforming. You go to a bank and say, hey, we can't pay you next month. They're going to come get the keys and they're going to move towards a foreclosure. So I've always built businesses with investor capital. And I tell people, look, if you're trying to buy a business or, you're trying to start a business, because a lot of people obviously, go and pursue SBA loans. I'm like, do you realize who you're getting in bed with? You're basically borrowing money from Uncle Sam. And if they don't pay you, there are major repercussions. Not only do they have rights to the business assets, they can personally seize your home. You're signing on the dotted line as a personal guarantor, usually for SBA. I try to open up people's minds and get them to understand that there are alternatives out there. Structurally, how we raise money, debt, equity, safe agreements. There's obviously different types of exemptions, Reg D, Reg A, crowdfunding, et cetera. And so we talk about all of these different things with the people that we consult and we work with so that we can open their minds so that at the end of the day, hopefully what they're doing is making the right decision about their business and stepping into something that's going to give them the tools and the resources to bring certainty to the outcome.
Let's jump into it a little bit. I'd love to help the listener think through, and I know many of them are trying to raise money. They're working to attract those high net worth investors, right? Let's go a little elementary, right? And speak through, capital raising, some techniques, whatnot. But then I'd love to, help them even further to 10x, right? What they're raising already, and maybe some things that they're thinking about wrongly. And so, the person right now that's listening, that's wanting to start raising money, maybe they have raised a few $100,000, whatnot, or from some friends and family, whatnot, but they're really trying to scale to the first, few high net worth individuals. Give them some guidance. I guess let's get started there.
Yeah. So let me cover maybe, 3 or 4 different things. Number one is money follows motion. And so if you think about talking to people that are prospects or potential investors, right, there should be a series of events that take place because it's very rare that anybody is going to invest in anything after they've met you for the first time. And so number one, the biggest thing that I see people do wrong that try to raise money is they have a deal. They're talking to somebody that is a prospective investor and they're pitching the opportunity way too prematurely in the process. It's like, hey, we got this great deal, we're doing a multifamily or we're doing a deal here in, Tampa, Florida and blah, blah, blah. And that other person that you're pitching to in maybe the first or second meetup or the first or second conversation is going to naturally end that conversation with something similar to, Whitney, it sounds pretty interesting. Can you send me some information so I can take a closer look at it? And so you send them everything. You send them your pitch deck, your memorandum, or you give them access to your data room. And then when you follow up, they never move forward. They never invest. And it could be literally the best deal you've ever run across. What's happening at a very subconscious level is that other person is saying, I just don't know you well enough to move forward. Like we just met, think about raising capital like courtship or like dating. One of the things that I've been able to do is take, roughly 30 years of capital raising knowledge and all my experiences and codify all that knowledge and put it into key concepts because I know people can grasp a concept. So you hear me talking about things like the 4-step blueprint. It's not a script. It's simply a blueprint so that in every interaction with a potential investor, you know exactly what you want the outcome to be. And then I talk about the trust sequence. These are 6 steps, how to build trust in another person. The validation phrase, 1 sentence that validates that other person is ready to move forward in the process with you. By instilling these concepts in the people we work with, they now have the blueprint and the framework to avoid these bigger mistakes. The other thing I think that also a lot of people overlook is that when you're moving people forward, try to move them forward to a future event. Most people that try to raise money don't have what I call the collateral things they need. Think about creating an ebook as a lead magnet. So when you meet somebody, you can say, I created a free ebook. Would you like to send you a link? Boom, you're moving them forward in a process. Or, hey, next week I'm hosting a free informational webinar on this very subject. Would you like me to send you a link to that event? You're moving people forward. See, now you're coming across as a person of interest, an educator, you're adding value. And then, of course, you follow up on the back end of these things. And I think one of the big challenges that a lot of people make is they just start talking to people. They don't understand many of these concepts and they get frustrated because they end up feeling like a hamster on a treadmill, talking to a lot of people, but nobody's writing me a check. Okay, well, let's dissect that. Let's try to figure out what you're doing wrong so that we can correct that and then put you right on the trajectory to success, which normally is what happens when people go back out and start doing it the right way.
Speak to that first interaction though. Before, yes, we shouldn't be talking about that deal yet. We got to nurture that relationship, right, in a big way. But even speak to maybe the elevator pitch everybody talks about, or the just really harnessing to get the relationship off on the right step.
Yeah, typically you're either meeting somebody at an event, or maybe they're a referral. We have a lot of people, obviously, that, just buy high net worth, accredited investor list, and, they're cold calling and they have their little, 30 or 45-second introductory thing, whatever it is they say. But here's the message, and this is a very, very important thing that took me years to understand and really get down. And I was actually taught this by my business coach, Coach Michael Burt, who I consider to be one of the best out there. He said, whenever you're asked what it is you do for a living, avoid making the mistake of telling other people what you do, because that's really not what they want to know. What they want to know is what you can do for them. So as an example, if I was an attorney and I was at a networking event and a meetup and someone came up to me and said, hey, Brad, it's great to meet you. What do you do for a living? Oh, I'm an attorney. Well, if they already have an attorney relationship, is there any reason that they would want to go deeper with me or invest more time? No, I'm an attorney just like the one that they already have. When I'm at an event and people ask me what I do, I don't tell them I'm a 3-time author or that I'm a speaker or that I'm a coach. I just say what I do for a living is I show people how to create passive income so that they can avoid exchanging their time for money. Might that be something you have an interest in learning more about? Nobody's ever said no to that. And so I then follow up when they say, yeah, I would. Great, let's get together for lunch next week, or I'm actually hosting a free event next week on this date and time, or, I've got an ebook on how you can invest passively in large commercial cash flowing assets. And I pique their interest because what I'm essentially doing is I'm sharing my skill set in a manner that they can relate to that gives them what they want, financial freedom, more time to spend with friends and family. I've learned over the years that, part of the elevator pitch is to really present what it is you do, but more importantly, what you can do for that other person.
Like that. That's definitely going to be more memorable.
Absolutely. You bet. And if I was an attorney and I specialized in a certain body of law or something that impacted people or did something in a positive way, I would lead with that. And then obviously support that, as an attorney. Or if I was a CPA, I might say, I use very creative tax strategies to help people lower their taxes.
I'm interested.
Exactly.
Right? I'm interested.
Exactly.
So, all right, Brad, we're at that conference now. You've got my attention. That sounds great. I'd love to learn more about that. What does the nurturing process then look like? The next interaction, when is that? How do you do that? You talked about inviting them or having something that, you wrote that you're going to give them. Maybe walk us through that a little bit.
So there's always going to be an introductory call or a Zoom or a meeting. And what I basically tell people is, great to connect with you. I'm glad that you've expressed interest. Right now, I just don't have an opportunity or an investment that I can openly discuss with you. So I let them know right up front, don't have an investment. And I just ask a lot of questions. We have a whole tear sheet or a whole list of about 20 questions to make it real simple for people that are in our community. Whitney, tell me about the best investment you've ever made. Or, what's your tolerance to risk? What's your time horizon? Are there certain things you look for when you invest, like income or capital appreciation? How important are tax considerations? All of these different questions. And I'm listening real closely, because what I'm trying to do is find out what will tempt you to move forward with that investment at a later date by tying basically the benefits to your needs. For example, I might hear you say something in our first and second session, like, I'm trying to let my money grow because I got 2 kids to put through school in the next 4 to 6 years. I'm going to zero in on that so that later, after I pitch, which usually is not until the 3rd or 4th meetup, I can say, do you see how this investment, Whitney, is going to help you accomplish that goal you shared with me earlier to put those kids through school in the next 4 to 6 years? The second you see that, you now want to move forward. And so now the benefit is tied to the temptation or the need, and now that breaks down the resistance for that investor. The other thing, though, that is really, really key here is telling people, usually at the end of the second call, that you want to put their name on a list of people that have expressed interest. So remember earlier I said, there's this concept called the validation phrase. I always am telling people, right now I just don't have an investment. And usually I come up with the excuse, I like to give my existing investors the right of first refusal on most of our new projects. And so as a result of that, they tend to fill up pretty quickly, or I'm working through a list of people that we met last week that have expressed interest. They don't know how much of this deal we'll have available. Would you like me to put your name on a list that I keep on my desk? So in the event I have an opening on something in the future that I think you could get real excited about, Whitney, I can reach back out to you and give you a call. Well, when that person says yes, put me on your list, really what they're doing at a very subconscious level is they're acknowledging that they trust you enough to now move forward in this process. And more importantly, they're teeing you up to pitch them something at some point in the future. So I just go to my CRM system and I put a little note in there, call Whitney in the next 7 to 10 days. It pops right up on my calendar. And, I call you back and I say, hey, Whitney, Brad Blazar here, 5-Star Capital, and spend a couple minutes warming you up, talking about things. And, eventually I kind of say, the last time we chatted, Whitney, you asked me to put your name on a list of people that I keep that have expressed interest. Just so happens we're working on a project, don't have a lot of it left, but you expressed interest and I wanted to make sure I reached back out to you. Do you have a few minutes? And so now I'm pitching that deal or that fund or that business. I send them everything. And now usually in that 4th or 5th meetup or call, we're answering questions and we're closing. And then it's just a matter of, rinsing and repeating this cycle of 4 to 5 calls or 4 to 5 meetups. It's an introductory call, usually a follow-up. And between the introductory and the follow-up, I just send them a little corporate piece or a little teaser. I don't send them the pitch deck. I will send them the memorandum on the deal. I just want to pique their interest. Then I ask that validation phrase, put you on the list, call you back, pitch, and then close. And this is what has allowed me and literally allowed, many hundreds of people to raise millions and millions of dollars because it's based on psychology. And, the top salespeople in the world that are the closers that make hundreds of thousands of dollars, they go beyond just selling flirt. They know the psychology of how the brain processes information. They know how to pre-frame the mind to a closing or a buying decision. Now, let's face it, when you're raising money, you're in sales. You're selling yourself, you're selling the project. And so you have to understand some of these more advanced closing strategies and or techniques like the takeaway. This might not be for you now that you brought that up, Whitney. And so then you start selling yourself. Oh, what do you mean it's not for me? And so, all these tricks that I've learned over 35 years of raising a lot of money are some of the secrets that we instill and share. Because at the end of the day, I tell people, look, you're raising 50 million a year already, like you're a rock star. But if I can teach you a couple things to raise an extra 15 to 20% more on top of what you're doing now because you're getting more people to say yes, that's another 10 to 15 million dollars. Is that not worth having a conversation? Sure it is.
No doubt about it. Yeah, I know I get questions about this all the time, and I know they'd love to hear this from you too. Just quickly, like how you're tracking these interactions, maybe the CRM that you recommend and the process there of documenting enough about the conversations that you can follow back up well.
You bet. Yeah. So many people, try to do this in an Excel spreadsheet. It ain't going to work. What happens is you talk to people with money and then you forget to follow up with them. You need systems and structure to this, and you got to treat this just like any other part of your business. Calendar, CRM system, putting notes in there. We used to use Pipedrive, which worked. Now, of course, we've moved over to Go High Level. Feel Go High Level is a very robust program, and what we've actually done is customize that. And we now basically utilize a platform that I call Capital Stack. And we make Capital Stack available to anybody that would like it, but it does everything. It's your CRM, your calendar, your texting, your emailing, your scheduling, your telephones. You can create actually the funnels and the content that you can post right there in the same platform. I mean, it does everything. So as people are opting in as leads, they go into the CRM. Now you or a team member can initiate the outreach. But there's something that's much more important about that. In sales, one thing that we have to be cognizant of is we want to try to remain relevant and in front of our prospect or in front of that person, even when we're not there. And so the best analogy I can give to people to understand this better is people that are real estate agents. Most people are not in the business of buying and selling houses every week or let alone every month. And so if you're a realtor and you're out there networking and you're going to all the chambers and commerce events and you meet people and you're giving them your contact, they might not be ready to do something for a year or let alone a couple years. So how do you stay relevant? Well, most good realtors have a drip campaign. They're sending something out to people consistently, bi-monthly. And so in sales, we have to understand what I call a linear and a nonlinear follow-up. So think of yourself like a boxer. The linear is that knockout punch. I'm talking with you. I'm on a Zoom with you. We're meeting face to face. But that nonlinear is maybe an email. Hey, Whitney, I saw this article a couple of days ago, made me think of you. And so now, boom, I'm back in front of you indirectly. Or I might put something in the mail and send it to you through the U.S. Postal Service. We send out a really nice bi-monthly magazine that goes out every 60 days. It's automatic to a group of people that we drip on. Because I know there's going to be a certain audience of people that might not be ready now, but they might be ready in 60 to 90 days. Maybe they're under contract to sell a piece of real estate. Maybe somebody leaves them an inheritance. So it's this linear and nonlinear kind of back and forth. And when I talk to people, I then send them a linear follow-up. And then I call them or I'm on a Zoom with them a couple of days later. Same thing with the cold lead. I want to warm up those cold leads with 2 or 3 emails so that they know who I am, they know about my fund, they know about the business before we ever even get on a Zoom or get on a phone call with them.
Yeah, no, I like that a lot. It's a real problem learning how to nurture the leads you already have.
Exactly.
Or you've worked so hard to get them in, but so long until it was like, wait a minute, we've got all of these thousands and thousands of leads. Then we're so focused on new leads that we've not really done anything over here to nurture the ones that have already checked the box.
Yeah, exactly. And, I think so many people are focused on the sale or, like you said, the new lead. And what they fail to realize is the long-term value of an investor or a customer in business. It's much easier to develop great relationships and allow that person to invest multiple times again and again and again. And many investors will actually do that again and again and again because they have the income or they have the net worth. And in most new relationships, we all remember the movie, right? Wall Street with Buddy Fotts and Gordon Gekko. Well, what did Gordon do? He gave Buddy a check for $1 million to go play with it, dude. Let's see what you can do for me. Then when he proved his abilities, man, the world opened up, right? And so same thing with most new relationships. Imagine that you're talking to a very wealthy physician. His first investment with you might be $50,000 or $100,000, but once you prove yourself and once you build trust, once he gets a couple distributions, what will his next investment be? Maybe 250.
Yeah, no doubt. And as we even think about that, and it's that patience, right? And nurturing and patience and nurturing performance. But then speak to, say, the retail investor, versus, family offices or broker dealers, and maybe how you focus, on them differently.
So when I was in the oil business, Whitney, we were raising money like most people, picking up the phones, pressing the flesh, meeting with people in, coffee shops, picking up checks for, $25,000, $50,000, aggregating all that money, which is what most people probably are doing here. They're working with what we call retail investors. I had a friend that was a very small RIA. And he called me one day and he said, I've been watching you from the sidelines. I know that you're super successful. I think what you do might be suitable for some of the clients whose money we manage. I said, great. And so, we naturally got together and we opened up our books and records. We took him out to some of the oil fields. We gave him pretty much everything he needed to do to, do his own due diligence and get to a place of comfort. And he said, look, I basically validated what I thought. My clients need some tax benefits. They are needing some cash flow. Why don't I gather 12 to 20 of my better clients and bring you in? Let's do a little lunch event. And so, I paid for some wine and some appetizers and some hors d'oeuvres. And literally in the 2.5 weeks that followed, because he did all the follow-up and he did all the work, he sent me $2.5 million. And a little light bulb went off, and I gathered up my sales team because I had a couple of guys that were working with me. And I said, guys, we've been out here fishing for minnows like we just landed a blue marlin. And if we understand this concept of marketing to the one to get in front of the masses, meaning he's got the relationships with all the rich, wealthy people that we want to get ourselves in front of, I would imagine we could 5x the amount of money we raise over the next 12 months compared to what we raised last year. And that's exactly what we did. So we started focusing on these very small boutique registered investment advisory firms. They're not broker-dealers, they're pure RIAs. So they get paid by their clients to manage their client portfolios. Usually it's a fee of about 1 to 1.5% a year based on the size of the investment portfolio. So, because you're not paying a commission, it doesn't affect your capital stack to the extent a commission would be paid to a broker-dealer, which is more transactional based. And we found about 4 to 6 guys locally that we just got to know, that got to know us. Now, most people think, oh, I got to have a big track record and I got to have a portfolio of, $100 million, blah, blah. No, you don't. What you need is a team of people around you so that you can prove to that other person that you can execute on whatever it is you're trying to do. Most people that get into the commercial real estate space come in as what? A co-GP on somebody else's deal. Leverage that other person's track record. Bring that other person maybe in with you. And so we have a lot of students that we've now coached that are raising money from registered investment advisors, broker-dealers, family offices, because they understand this concept. And here's the funny thing. When I worked in capital markets, I was hired into 2 brand new companies, meaning they were startups, no track record, no portfolio, nada. And I was the first guy brought in the door to raise capital. And so I sat down with the CEOs and I said, there's a number of ways we can do this. We can do it this way. We can do it this way. We can do it this way. And in each case, the guy said, let's do it that way. I like the idea of leveraging the relationships that these other people already had. And so me and just one other person, just 2 of us, or in many cases, just 3 of us, one in California, me in Texas, somebody on the East Coast, in each instance, in the first 12 months, raised well over $100 million. First 12 months, because we weren't raising money, 25, 50,000. We were focused on developing relationships with key people that could send us $5 million. $10 million. And it's not as difficult to do. It's just a change in mindset.
Maybe speak just a little more to that mindset shift, because I think it's hard for me, even initially, for most to believe, well, how could I even go ask somebody for 100,000? Like you said, I have no track record. There's so many limiting beliefs and a wall up there that we've put on ourselves, right? But then to transitioning to being able to have that conversation with a family office or somebody or RIA that could bring that 5 million, like you're talking about, and being confident, in being able to do that.
So there's a couple things. First of all, it's understanding what you do. So, whether you're raising money for real estate, whether you're raising money for oil and gas, whether you're raising money for, something like crypto, you're in an area that we define as alternative investments. So you think about traditional investments that a stockbroker might sell, stocks, bonds, mutual funds. But you think about all these other things that are alternative investments. And so when I call a registered investment advisory firm or I reach out to a family office, very early in the discussion, I ask them, do you utilize alternative investment products in building out and designing portfolios for the clients you serve? And if the answer is yes, 9 out of 10 times they're doing the stuff that I'm marketing: real estate, oil and gas, private equity. And then I start just asking questions, what's the time horizon typically to the investments you like to look at? Is there a particular size of deal or a size of fund? And I try to do the same thing that I would do really with a retail investor. I understand that, their due diligence process is more than likely going to be a little bit longer, and they want to look into the business a little bit more. And I need to show them that we have all of the things that I know they're going to want to focus on covered. I talk to them about compliance. I say, we work with the top law firm that does this and make sure that we remain compliant throughout the process. On the accounting, we've got a relationship with a CPA firm that is going to make sure you get your K-1s and send out your quarterly distributions. And, over here, we've got this company taking care of property management that's been doing this in the community for, the last 20 years. And so when you can kind of go around the clock and talk about the things that are going to be important to a more qualified purchaser or a larger investor, they start to sense that, okay, these guys get it. They're not newbies, they're not beginners. They have the compliance, they have the infrastructure, they understand investor relations. And so that's what gives people comfort. When I was sharing the stage with Kevin Harrington from Shark Tank, he said the reason many people come on the show, they're bright, they're PhDs, they're engineers, they got a great product or whatever, but they don't get a deal. It's because the doubt we have in them as sharks in their ability to execute. You see, when you remove that concern or that risk from the equation, and you can bring certainty, or at least a level of certainty, to the outcome by allowing that person to see that you and your team can execute on the strategy, why would you not want to invest? And I think the problem, Whitney, that so many people have that are new to this game is they fail to realize this is a team sport. You see, if you're talking to an investor and you're brand new at this, it's not you, it's the collective experience of your team. See, now you can tell that prospective investor, the collective experience of the team that I've assembled exceeds over 50 years in the real estate and securities industry. Got a law firm, got a CPA firm, got a property management firm, I got a partner. And so now there's comfort. It's not just you as a solopreneur or wantrepreneur spinning a bunch of plates. Now that investor sees, okay, this dude's like a composer in front of an orchestra. He's got a team of people behind him. And so that's what gives comfort. And I think that's what allows new people to the business to raise significant amount of money. It's just understanding some of these concepts rather than going out there and trying to do it all yourself.
Yeah, no doubt about it. It's the team, right? And falling back on the track record of the team. I couldn't do it without the team. I don't know. There's no way around that. I feel like for me anyway, I got to, they're here because they have an expertise that I do not have. Right. And I couldn't have them all. And an investor wouldn't want me to be the one to think that I have them all either. Right. Let's say that, the person listening who's maybe they're raising 20 or 30 million a year. Pretty steady, right? So they have those processes down. They're buying deals. They understand the syndication game. But man, they really want to scale that to, 50 million, 100 million a year. What are some things that you would maybe ask them or put in place for them or for them to really strongly consider moving and, really stepping up their capital game?
Yeah. So, when you've got that level of success, you've got a track record or, you have a portfolio, I tell people that you're ready to really give consideration to either tapping into the family office space or building distribution with broker dealers. I was the head of capital markets for companies that, have scaled to where they're raising, and this is scary, they're raising over $1 billion a year, $1 billion a year in equity coming through the front door. But see, here's the thing to understand. They're not on the phone raising money like most people. They built a network of brokerage firms. And some of these brokerage firms might have, 5,000 financial advisors. 2,500 financial advisors. And so by going through a process that I can help people navigate, because I've done this for such a long time and I know all the players, we go through the process of getting due diligence. So the first thing is that any major broker dealer wants to vet the sponsor, because the last thing they want to do is they want to take somebody's fund or somebody's project, market it to clients of the firm, and then obviously have the deal blow up or not work out well and get egg on their face, or worse yet, end up in a lawsuit. So they go through what we call third-party due diligence. I just say they're vetting the sponsor. Once you go through that process, you get what we call a selling agreement. It's basically where a broker-dealer just says, welcome aboard, Whitney. We're going to take your fund. We're going to put it on our product shelf along these other real estate investment trusts and alongside these other oil and gas deals. See, now all of the financial advisors with that firm have access to your deal. And hopefully now what they'll do is they'll share that opportunity with the clients whose portfolios and money they manage. And so you just sit back, and it's like a plane taking off the runway. 3 months into this, you might be raising $1 million, $2 million. 6 months, it's 5. The end of the year, it's 10. And as you add more broker dealers to what we call your distribution team, that number can scale into the hundreds of millions of dollars. And so the companies that I was with as the head of capital markets when I exited, they just continue doing exactly what we were building. Now they manage $18 billion, $8 billion, because they just go long in the same direction, just more broker dealers, more RIAs. But it was basically the framework and the initial foundation that we put in place when I was there building it out. So that's what I would say to guys that have already raised 25, 50, $100 million that have assets, is really take a look at this alternative to build distribution for a fund in the broker-dealer and the RIA space. Consider launching a $50 million or $100 million fund. And don't be scared about it, because you're not going to be subscribing that the way you're doing now with small $25,000 and $50,000 checks. You're going to be leveraging the resources of major financial services firms that are going to raise the bulk of that capital for you.
Yeah. Wow. We got to broaden the ideas, our thoughts, to get the blinders off a little bit, right? And break down the thinking that we can't do that, or we don't have the track record yet. Speak to, and I know you're not an attorney, but I don't think you are anyway, but, speak to, compensating somebody like a broker dealer. How is that done? As far as, them, I don't know what the agreements are with broker dealers. We've not partnered with any.
Well, as most people know, it is against the law and an SEC violation to pay anybody to raise capital for you in any type of a transactional-based relationship. So, the way that we kind of get around that to some degree in the real estate business is we bring somebody in as a co-GP. And so the very first thing that we need to understand is that as the sponsor or the issuer of the securities to the public, we're relying on a certain exemption. It's called the issuer exemption. I'm the issuer. I'm selling a security, i.e. an investment, to somebody, and I'm relying on this exemption. We file the Reg D notification to make our fund effective. Well, when I bring somebody onto my co-GP team, they need to be relying on that same issuer exemption that I am in order not to be a broker dealer. But here's the big mistake a lot of people make. That other person whose only role is that of raising capital is not taking on the responsibilities that normally a general partner would have in doing a deal. What does a GP do? He underwrites. Sometimes they go and they actually visit the asset. They do a property tour. They interview property management people. They do everything. And so if you're bringing somebody onto your team as a co-GP, you've got to assign to them and delegate to them other responsibilities that go well above the role of just bringing capital to the table. Because if all they're doing is just getting basically compensation for the raising of capital, you're in a very gray area there. And most attorneys I know would argue that's not going to be very defensible. The other side is a broker-dealer. They are licensed, so you can definitely pay them a commission. And so the way this is traditionally done, if you are raising capital, is you design your fund and your offering with a commission built in so that you can pay out to a broker-dealer. a commission to the registered reps and the financial advisors. And, typically that's somewhere in the range of about 4 to 7%. Just depends on the size of the fund, what you're trying to do, the size of the broker dealers. And so, in your underwriting model, when you're looking at your capital stack, you have to look at, okay, we're going to be raising all this money or the majority of this money through broker dealers, and understanding that because there's a commission, if somebody gives us $100,000, we're not getting all of those proceeds. We got to pay out over here, maybe 5,000 or 6,000. So we're netting maybe 92 that we can actually put into the dirt, put into the actual real estate. So it's just a different model. But, once you open your mindset to that, and once a guy like me says, hey, come over here and talk to this person that have already gone through this, and they're like, man, it's the best decision I ever made. Now I'm raising $300 million a year, and I'm just sitting back and the money's coming in, and I got, 20, 50 broker dealers that are out there raising the majority of this capital for me. It's just a different mindset first, but then it's just basically following a proven blueprint, just like anything else. And so if the person's there with the knowledge to show you the blueprint, it's just a matter of following that proven blueprint. Here's the introductions, here's the people, here's the due diligence teams, here's the broker dealer list. And then you just basically just move forward. Yes, scary at first, inevitably, like most other things, right? But we're going to realize, what is fear? Fear is false evidence that appears real.
Like that. Yeah, no doubt about it.
Fall into that fear, and you start chipping away. What happens? Your confidence gets boosted. You start to realize, man, I can do this. Like, I was scared at first, but now that I'm moving forward and I'm having wins and I'm seeing the light at the end of the tunnel, that confidence, just starts to get built. And so I think that's part of the journey of, being an entrepreneur and, sharing stages with people like Floyd Mayweather, John Maxwell, Elena Cardone, and I can go on and on and on. The one thing I asked him is, what made you an 8 or 9 figure entrepreneur? The answer invariably that most everybody gave to me is, I don't listen to the white noise in my mind. I've learned that my brain is fooling me, because every time I want to do something big, I kind of back away from it because it's fearful. We have a tendency to always step back from things that scare us because we pre-frame that decision with memories of our past. Oh, last time I tried that, it didn't work out very well. Therefore, I'm not going to try it. So what very successful people do is they commit first. They just make a decision, boom, I'm doing it. They don't even think about it. And so they've learned that their mind, like you said earlier, is going to constrain us and hold us back from really doing some amazing, great things that we're more than likely probably capable of, but we're fearful of. And so as a result, we don't commit and take action. And procrastination, that limiting belief, whatever you want to call it, it's the biggest killer of dreams.
Brad, speak to raising capital today versus 2 or 3 years ago, right? I know we and many people in the industry that I know that have been raising money a long time. It's like, man, their ability to raise money is almost half of what it used to be, right? And just investor sentiment, a lot of deals have gone south. Obviously, floating rate debt, all those things that we know have hurt so many operators at the moment. Speak to them as far as how they can build that back up again, right? Or how they should even present, new opportunities to their current investor base who's scared of the market right now. Or I don't know, just any thoughts around how they can get back in growth mode again?
Well, there's a couple things. Number one is, remember that, through the Jobs Act, we've really opened the door to solicitation. Reg D, 506C, we can advertise, we can do webinars, we can do a lot of the things that we were not able to do literally, 10, 15 years ago. So back in the old day, we had to have a pre-existing relationship. And so it was much more challenging because you cannot advertise, you cannot use social media, you cannot do webinars and a lot of the things that we're taking advantage of now to create the opt-in and get lead generation and, build conversations and meetups with people. I do agree that investor sentiment is very different. We're all fearful of the next big scandal. Oh, the Bernie Madoff, or, we've seen deals blow up. We've seen interest rates go up. We've seen deals become distressed. I think what you have to do as an operator is really put yourself in the potential investor's shoes. And one of the things that I always tell our students that we coach is most people that raise capital as they're pitching, never disclose or really openly talk about the risks. You see, you have to understand the psychology again. Most investors in the subconscious mind are thinking about all of these risks, all of the quote, what ifs. After I pitch and after I walk through the opportunity, I pause for a second and I say, Whitney, I'd also be real remiss if I didn't openly talk to you about some of the potential risks. So let me just walk through with you a couple of the things that can potentially happen and respond to those things so that if they do, you know exactly how we would react to that. And so I just say, first thing that can happen is this. If that happens, da-di-da-di-da, we're going to do this. And then I say another potential risk, Whitney, is this. And in the event that happens, da-da-da-da-da. When I do that, what's happening to that person's mind is they're like, wow, they thought of those things that I was concerned about. And because they've given thought to those things, and I've just heard how they respond, they probably have also given thought to the three other things I was going to ask them about also. So I don't need to ask them. And so it puts those concerns at rest. And for the first time, you're probably one of the very few people that's ever talked to them about investing that was fully transparent, that openly talked about the risks. But when you look at a trust meter from 0 to 10, and you openly talk about the risks, where do you think you are on the trust meter? You're probably at a 9 or a 10 because you provided full transparency. You put all the cards out there on the table. Yeah, now the person subconsciously is like, okay, I feel much more comfortable now because now I understand that they're going to be able to address those things that I was concerned about. But more importantly, the two other things that I was also thinking about, I really don't need to ask because more than likely they thought of those things too. And so again, it's just understanding, some of these more advanced strategies to get people committed and get people to move forward. Because let's face it, every investor has a stop sign. They all have certain bumps in the road that you have to respond to. But the big thing I think that we need to understand is raising capital at any level, whether you're just trying to raise a couple $100,000 to flip a house, or whether you're trying to raise a couple million to take down a deal, or you have a fund and you're trying to raise 50 or 100 million. It's about activity. It's about creating the daily and weekly activity so that you're constantly having conversations with people. The other big thing that I very, very frequently see, and it just amazes me, is why people don't ask for referrals. I think it gets back to kind of what we were talking about earlier, Whitney, where we're so focused on the sale that we don't go back to our pre-existing relationships. Like, you should be going to your investor base, if you have one, after you've built some loyalty, and asking them, who are you connected with that we should also be speaking to? You see, and the way that question is asked is, hey, Whitney, do you know anybody? The mind shuts down because you're like, no, can't think of anybody right now. But when I just ask the same question using a different choice of words, and I say, hey, Whitney, who are you connected to that I should also be speaking to? The mind kind of expands a little bit. And, hopefully people start to pop into your mind. Oh, I go golfing every week with a business partner. Or I got a friend that just sold their business. Great. Would you mind sending an introductory email or whatever? Those are like gold. Because the likelihood of somebody investing through somebody else's referral is far greater than you trying to build that relationship from scratch, because the transference of trust is then implied in that relationship. And so, if you probably want to raise, another 10 to 15, 20% more over the next year than you raised in the last 12 months, just go back to your existing well and ask those people for referrals.
Yeah, no, that's such a good idea. It's such a good thought to be focused on, be consistent about, right? Asking for referrals. And it was a phase we went through where we didn't, and it's finally hit us. So wait a minute, why aren't we doing that? You aren't during these investor calls. Why aren't we asking? A few final questions, just quick questions, but what's your best advice for a passive investor today?
So, if you're a passive investor today, the best advice that I can give to you is take action. Don't sit there in indecision. Don't sit there and waver. Take action. I tell people, if you get started early enough, or you just take action now rather than procrastinating, you're going to be so much further ahead than people that are wavering and indecision. So the first thing is to take action and commit. But the most important thing is really get to know the sponsor. get to ask the right questions, do due diligence, really, build a relationship before you write the check.
What are some of the most important metrics that you track? Could be personally or professionally.
So obviously NOI. The other is sales activity, outbound calls, and then a big one is the conversion on that effort. It's great to make 100 calls a week, but what's the percentage of people that you're actually converting and that you're actually moving forward? And then the other big one also, that we track is no-shows. We have somebody that's opted in, or we have somebody basically that has booked an appointment and for whatever reason they don't show up. We don't forget about them. We reach out to them. We always have a team of people that are going to reach out because a lot of times invariably they're just busy or they forget about it.
What are some just daily habits that you have that you're disciplined about that have produced a high return for you?
One is I wake up early. I find that most people that wake up early get a lot more done in the day. And so I'm usually up about 4:30. I get my fitness out of the way. That's obviously a priority. I kind of look at my emails, and then, my typical workday gets started at about 7:45, 8 o'clock. The thing, though, that I find a lot of people make the mistake of doing is, we all know what Calendly is, or we all have, kind of that scheduling app. And so whenever we book appointments, we're usually booking by the hour. Well, a lot of the meetings you're in when they're booked are only going to be 15, 20 minutes. And so the call takes place. Then it might be 45 minutes to the next call that's on your calendar. What are you doing for those 30 to 45 minutes? You're sitting there, maybe looking at emails. You're doing things that are, quote, unproductive. The biggest thing that I did that changed everything for me, that literally found more time for me in my calendar, was I booked my calendar in 15-minute increments. If I'm going to be on a call with somebody and I think it's going to be 30 minutes, it's booked on my calendar as a 30-minute call. I don't black out the hour. If it's going to be a short call, it's 15 minutes. Then I have the other 45 minutes for another call. So that allows me to get a lot more done throughout the day. It's really by just structuring my entire workday in 15-minute increments. That was a major, major needle mover for our business.
Brad, how do you like to give back?
I like to give back by helping others. I think you get to a point in life where, you all get the naysayers, you get the haters, you get the people like the Tony Robbins, the Ed Miletts, the Grant Cardones. They don't need to be out there on stage coaching and helping people. But what they want to do is they want to impact people in a positive way. And so, it's all about basically empowering people. And then, of course, the other thing is, we basically also are very philanthropic, and so we try to help the MD Anderson Cancer Research Center to the best we can. But, it's really, I think, about just empowering people that are either stuck or that don't know how to go about doing something. And I firmly believe that the majority of people around the world, Whitney, which is why we currently have relationships and we coach people literally in about 30 countries globally. I think everybody has a burning desire to do something bigger in life. It's like inside you, there's another gear. It's like, man, I got this burning desire to be doing more. I know I'm capable of doing so much more, but it comes down to what we talked about. They just don't have the money to do that big idea or to execute. And so if we can empower them and give them the resources to go out and raise their first couple 100,000 or the first million, we're making dreams come true. That's really a cool thing when you think about it.
That is cool. That is cool. Breaking down those self-inflicting barriers, right? Just understanding that they can go get the capital that they need to start that business or whatever it may be. Well, Brad, grateful for how you've given back to us today and helping us think through scaling our capital raising abilities in a big way. No doubt that you are just a major resource and expert in that area. So grateful to have you on. Tell the listeners how they can get in touch with you and learn more about you. And I know your coaching and your books and different things.
So I'm pretty easy. If you just Google my first and last name, Brad Blazar, it's spelled without any E's in it. So it's Blazar, Blazar, but just go to our website, www.bradblazar.com, or, look for me on Instagram. I got the little blue certification check. Follow me on LinkedIn, follow our podcast, The Capital Catalyst Show, and, just reach out. We got so many resources and tools available to people that are either beginners or more advanced. We do workshops throughout the year. We go to some events. We'd love to have you come to some of these family office events and, meet some of the celebrities, meet some of the wealthy people that are there. What I believe is creating proximity. I believe that sometimes you're just one connection away from literally a major transformation in life. And so, I tell people, if you want to learn how to network with family offices, just come with me to one of the events I go to. And now I'm walking you around the room and I'm introducing you and you're networking and having breakfast and lunch and enjoying a cocktail with, the family office delegates that are there. And by creating the interest, it's then just a matter of following up with them once you get home and starting to build that relationship just like you do with anybody else. And so that's the easiest way, I believe, to break into the space is just take advantage of the many opportunities that already pre-exist out there, where they're going there to look for what? Guys just like you and me that have deals, have projects, have things they can tangibly invest in. But that's the easiest way to find me. Just go to our website, reach out on Instagram or LinkedIn.
Awesome. That's a wrap, Brad. That's the end of the show.